Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 10th of March 2023. First chart, as usual, is the US dollar index futures. This market plays such a large part in the price movements of so many other markets. When you have some understanding on what this market's doing, you get a better chance of working out what the other markets may do in response. Just put some lines in. This is where supply came in at the highs of the range, and then price broke down. They're the subsequent breakdowns here and here. You can see how the thrust reduced as price pushed lower. It did appear, and we mentioned it at the time, that the market was perhaps finding some sort of bottom here, or attempting to, and price moved up to the breakdown line here and here before it pushed above it on a reduction in volume. But that suggests when a breakdown line is overcome on lower volume like that, particularly when spread is around about average-ish, that sellers in the market were reduced, and a small amount of buying was able to push price above that important level with relative ease. The following week, the market consolidated, so any supply that was drawn out in response to the recovery of the breakdown line took place on this bar. This was absorption. So that's adding strength to the recovery and a form of support, you might say. And this week, prices attempted to push higher, supplies come in, and you can see that volume is quite high, so activity was high, volatility was high, and on that supply that's come in, the market's pushed down, tested the lows of the range, and closed just slightly above its low. So there is still some support in the market here. Some buying support has come in at the lows of the range. It's getting to be quite an important level now, this breakdown line here. A recovery above a breakdown line is usually significant, and it doesn't normally happen very easily. It did appear that it happened a bit too easily on this bar on low volume, and the subsequent absorption that took place did tend to strengthen the move. We'll just see if it can hold on at this level. It did a pretty good job this week, considering a lot of supply appears to be drawn out and the market's held on. Next chart is the E-mini S&P. This is the S&P 500 index futures, and I'll draw the highs of the range in first. This is forming resistance. The market broke down here. It didn't want to break down. It tried to hold on this bar. It tried to hold on this bar. Eventually, finally broke down here. And this was sort of a minor automatic reaction. And that's confirming this breakdown line, making it into a zone, you might say. This is resistance above. Price broke down to this level, pushed back up, wasn't able to recover the level, came back down again through here, and we noted at the time that some buying support had come into the market down at this level, and that's then supported this push higher here. The market wasn't able to challenge the highs of this resistance zone, and if you drew a line across from that, that's sort of reinforcing that this is a tough zone to overcome. And you can see how the market more recently has come up and challenged this level and tried to absorb the supply at this level, but it has still broken down and pushed lower in recent days. Back here was a period over Christmas where consolidation took place. You can see the markets found support there this week as it broke down below the lows of the previous support bar 2 weeks ago. This isn't a particularly strong level here. This is the stronger level down here. There is some support at this level though, so we'll just see how it goes over the next week or so and whether price can actually find sustained support down here or whether there will be another leg down. If there was another leg down, somewhere around the 3,600 is going to be where the strongest support is, where these bars here all found lows. But at this point in time, the market did find support adjacent to where the market consolidated over Christmas and New Year, and it has found support there, at least temporarily, this week. 10-year note futures. Draw the lines in quickly. You can see how price has pushed up to the highs of the range, found resistance, come back down, attempted to find support, wasn't able to, came down to the lows of the range, and we suggested last week that some minor support may have formed there, and this week in response prices accelerated higher and recovered, it appears, back above this breakdown line here. That'll need confirmation over the next week or so, but at this point in time, the market's pushed clearly back above that breakdown line. It's only a minor breakdown line. It's within this range, so it's not a major breakdown line, but it's a breakdown line all the same, and generally when they're recovered, it's significant. So if the market can test for supply sort of in that level and then push higher again in response, that would be quite a strong move for this market. Copper price futures. Now, copper price futures have in the background some accumulation, as do many of the commodities charts, and price originally attempted to consolidate at this sort of level. It was a test of the breakout. Here was the breakout. Here was the test of the breakout. There was a secondary consolidation in here, and that was the telltale sign that price was probably going to push higher again. Now you've got resistance coming through over here. Here's the actual breakdown line, and that's probably playing some part as well to the resistance above. There's a higher level up here, will be the breakout overall, but we'll look at that another day. This week, price has remained within the range of this consolidation period. You can see price has been quite volatile over the last couple of weeks, but this week spreads narrowed and volume reduced to about average. So it appears that the selling pressure in this little zone here has probably been absorbed over this bar, and this week allowed for just a little test for supply, really, and it showed with reduced volume and just slightly below average volume, the selling pressure had eased. So that's a good sign that this market has absorbed the selling pressure or the weakness in the market, and that may allow it to push up and perhaps even challenge these levels above. Gold price futures also have some consolidation and accumulation in the recent background. And similarly, here's the breakout, and here was the test of the breakout. You've got a breakdown line that comes through here. This is the important level. You can see price wasn't able to overcome this level when it attempted to in the past. And then there was a period of absorption that took place throughout here, which allowed the market to finally push back above this breakdown line. Now the market's come back and it's testing this line for strength. It may not have done so of its own choosing, but the market gets pushed around just like every other market, and this market's been pushed around and it's now come back and it's testing the breakout. And so far, it's found good strength at this level. Other markets may have pushed below this level. This market's held on for 2 weeks. Now this week, there was testing for supply, absorption at this level, and then the market's popped out the top and closed just above the previous bar's high. So it would appear that this market has found support at this level on top of the old breakdown line and is effectively confirming the breakout. Now, if price is able to push higher in response, that would be a good sign that the confirmation has taken place. Now, to the left, here's the highs of the range, and there's the lows of the range above, and the center of the range, or the most difficult part to overcome, is probably there, the juncture of those two bars there. But overall, this is a resistance zone above. This is where the market's attempted to push higher more recently and found resistance and found it difficult to push higher. And you can see the bar here pushed higher with real vigor, with increased spread, but spread narrowed as it moved into this zone because supply continued to be drawn out, made it difficult for the market to move higher. And in response, and due to other reasons across the markets generally, price pulled back and went through this period of testing the breakout for strength just recently. This zone above is going to cause difficulties again in the future, although this period here may have weakened it somewhat, at least up to this level, which is the center or the highest point of resistance within this zone, I imagine. Silver price futures, similar to gold and to copper to some extent, have some accumulation in the background throughout here. We commented on it on these two bars in particular, I remember. Price broke out. Here's the test of the breakout, or the effective test of the breakout. Price pushed higher again. You've got resistance to the left coming through there, and there was never any really serious challenge to that level, unlike gold, which actually did push into that zone and really challenge it. This market pushed up to the level and then eventually broke down here. There was a bit of a cascade lower. Here was an attempt to find support. You can see on this bar, selling pressure eased with the reduction in volume, which allowed price to push up a little bit, but price has broken down again this week. Although the close off the low suggested some buying support has come in again. So you're pretty close to, here's the highs of this range in here. This is the accumulation zone before the breakout. So you can see where the market has found support within the previous accumulation zone at its highs. There's further support down lower if required, but this is the highs of the range here at around 20, and that's where the market found support this week. So that may allow the market to test for supply and response next week and perhaps move higher if selling pressure is found to be low and trading conditions begin to become more favourable again. Like crude price futures have been finding support sideways for some time now. This was the lows of the original range, and here was the breakdown, and a little breakdown line here where some support was found here. Actually, it wasn't support so much as a lack of selling pressure came in here, and that allowed the market to push back up. It wasn't able to overcome the previous breakdown line. This is actually quite an important line on this chart now. Price broke down again here and cascaded lower after a brief attempt to recover. And since then, the market has been comfortably trading sideways. You've got to the left here the old support zone. You can see how that plays a part. The market's really bouncing across the top of this support zone in the past. And price is comfortably trading between 72 and 82. And at this point, it looks like it may continue to do so. There's pretty good support coming through just above the 70 level, and there is resistance above, and there's no real appetite for pushing higher here by the looks. Spreads have narrowed somewhat, and when spreads contract to a reasonable degree, you'll often find an expansion at some point in the future. It hasn't really got to that stage yet. You can see here, if I change colour, you can see here that just recently spreads are contracting, sort of like that. And when it contracts to a certain point, you'll often get price expand out in one direction or the other. in response to the contraction. I'm not sure we're quite at that stage just yet. This market looks comfortable trading sideways within this range between the 70 and 82 levels. So I would expect it'll stay there at least in the near term, or unless some form of catalyst takes place to cause price to move with some more vigour. Aussie dollar currency futures actually broke down a bit this week. I thought that they would find some more support around the 68 cent level. And if you remember, supply came in on the US dollar index. So that should have allowed this market to push higher in response, and it hasn't really done so. It's broken down below all these previous support levels. And although it's not confirmed yet, that looks ominous, I would say. That looks ominous for a push down to lower levels, to somewhere down here. I mean, the market could reverse, there's no doubt. It's not confirmed yet. The market could reverse like this and recover the 68, which I thought it would do. But it does look ominous that it pushed below the lows of this bar and this bar and this bar this week. So we'll watch for the response. We'll keep in mind the market could easily move down to these lower levels over the next few weeks. But it's not a confirmed breakdown yet. It's certainly threatening to do so. Bitcoin futures moved lower this week when I expected the market might be able to recover some ground. We'll put some lines in the background. Now this line here doesn't really continue to the right anymore because it was overcome when price moved back up to the highs of this range. So you've got your new level really here and at the lows of this range. So you can see where the market now is attempting to move into. I thought support would be found at this level and price would attempt to push higher back up to this level, the highs of the range. There is a level coming through there as well, but that's not really playing any part at the moment. I know there was some news in this market this week, later on in this week, which caused price to be a bit more volatile, and that may be why prices pulled back to the 20,000 level or thereabouts. So whether this market will end up being strong enough to reverse, or if the market will push down to the lows of this range, or even to the overall lows, we'll just have to wait and see as this volatility settles down in the next week or so. It wasn't a good sign that price pushed below this bar's low. This was the previous support bar, and price had stayed above it and looked like it would hold it, I thought. The news this week may have changed this market, at least temporarily, and that's what's caused the breakdown, or the potential breakdown. It's not a confirmed breakdown yet, but it certainly is threatening to do so, and it looks like the market may be coming down to this sort of level and attempt to find support. This level is the low of this push higher, where the market moved out of this little sideways accumulation zone and pushed higher. It's not a particularly strong level. This is the stronger level, the lows of this bar, where support was found. But anywhere through this little zone here should have increased support. And a break below that, and a break below the 16,000 level for a longer term number is a significant level, and that's coming through about there anyway. So you're coming down towards a stronger level, which if broken would be significant for this market and would probably see price move down towards the 8, 10, 12,000 level. I'd have to go back and have a look to be more precise than that, but I know that that's the level. 8, 10, 12,000 is below the 16 as the previous support zone. So the next week or so is going to be quite important for this market. I would expect it will attempt to find support at the low of this bar. And if it can't do so, within this range where the red circle is, should be increased support. And the support lasts right down to just below the 16,000 level. Back to the US dollar index futures just quickly. Put some lines in. This market is so significant to the movements in other markets. And when you put those movements into context, this market can really help you make some sense of where the market may go in the future. You have to say that there has been, despite the volatility and the increase in volume was substantial, the fact that the market didn't break below this important breakdown line and the lows of that little test for supply or absorption bar is probably showing you that there is strength in this market and it doesn't want to go lower. If forced to, it will, there's no doubt. And then this level would come back into play. There's probably a little support just there, but the lows of this range is where the true support is. But this market is holding on and attempting to absorb the supply that's being drawn out at this level. And whether it's successful or not, we'll have to wait and see over the next week or two. It's definitely making a determined attempt to. And if it's able to hold on at this level, it would be in position to push back up and perhaps issue a challenge to this more important breakdown line. On the other side, if this market does break down and move back down to the 101 sort of level, that would be a tailwind for many of the other associated markets. The other thing to note is when this market is strong and other markets, in particular like gold and copper have been more recently, and they're able to absorb the strength in this market and maintain their levels like this. Gold didn't break down here when the US dollar was stronger. This is showing you underlying strength in the market. If it can hold on and not move lower when the US dollar's moving higher, oppose that to the silver chart where price has cascaded lower in all those weeks, apart from one where there was a tiny move higher on relatively low volume or low selling pressure. This market was more volatile and acted more weakly in response to the strength in the US dollar, whereas gold held on and copper held on. These markets were much stronger. There was underlying strength in these markets. They didn't collapse and move lower in response to the strength in the US dollar. So when that happens, you know this market has underlying strength in it. And when trading conditions become more favourable, these markets are the ones that push higher in response. So what happens in this market in the near term is probably going to be significant for those other markets that are showing strength. Okay, that's a lot for now. Thanks for your time. See ya.